Hi traders, today we're gonna see a powerful strategy based on Ichimoku Cloud that has generated 424% net profit. At the first glance, this indicator seems pretty complex. That's why we will simplify it as much as possible, keeping all the necessary stuff to maintain its effectiveness. So, let's dive into it! We have a lot of lines in the chart, and in my opinion, it's pretty complex. Let me quickly explain in 2 seconds what all these lines are about. So we have a conversion line that basically is the midpoint between the highest high and the lowest low over the specific period, which in this example is 9. Then we have a baseline, which is this red one. And basically it's the same as the conversion line, but is calculated on a longer period of time. Then we have a lagging span, is the closing price plotted 26 periods back on the chart. Anyway, we can remove because we won't use this line. And then we have a leading span A and the leading span B. The leading span A is the average of the conversion line and the baseline. It is plotted 26 periods ahead on the chart. Whereas the span B calculates the average of the highest high and the lowest low over the last 52 periods. Similar to the lagging span, it's plotted 26 periods ahead on the chart. So as you can see from the chart, this lagging span A and lagging span B will generate a cloud. This is called cloud. And it will be green if the span A is greater than the span B. Whereas if the span A is lesser than the span B, then it will form a red cloud. So to keep it simple and make an analogy, you can see this indicator as a moving average. And in fact, as you can see, it follows the price, such a moving average, and the cloud as well. But these clouds are really important. So let me quickly remove this indicator and apply my indicator. I just leave the cloud with the span A and span B. And I have removed the baseline and conversion line because we won't use them for our strategy. So how the strategy works? As you can see, these two lines act as a support and resistance. In fact, as you can see here, there is a breakdown and the price continues in its downward direction. Whereas here, there is a breakout, and in fact the price has started an upward movement. We can take advantage of this breakdown and breakout movement, and then we can use it even for a confirmation, because as you can see here, we have an uptrend, and then the cloud is green. So we can use this cloud as a confirmation for our entry signal. Let's see some trade on a chart. We can enter in a long position in these two situations. If the price closes above the span A and the high is greater than the span B, like in this example, otherwise if the price crosses and closes above the span B and the span A, we have a long position as well. So this is essentially the base rule or long entry signal, but we can even set a cloud confirmation, which basically is a filter, which means that if we have a long position, the color of the cloud must be green. In fact, as you can see, by applying the cloud confirmation, this trade is disappeared because we have a red cloud, whereas here, green cloud, we still have a long trade. We can even set a just cloud, which means that we will leave only this filter alone without waiting the price to cross above these two lines. Whereas for a short position, the price have to close below these two lines or can close below the span B, and then the low is lower than the span A, and then we have a short signal. As for the long position, we can set cloud confirmation, so basically we will enter in a short trade only if the color of the cloud is red. In fact, as you can see here, this trade is disappeared because we have a green cloud. We can even use this cloud confirmation alone without waiting the price to cross, as for the long position. So basically, this is all the strategy. It's pretty simple rule. I make it more simple as possible, and let's see some backtest results. So we are here on Mana USDT, Bybit exchange, 1 hour time frame. Initial capital $1,000, 0.06% commission, $1,000 order size with a fixed order size, and leverage 2. We are going only short, stop loss percentage 2% stop loss, and take profit 4.3%. As you can see, we have a really great equity line, especially from here to here, it basically always goes up. Then here it goes sideways. At the end of this equity, it starts a little bit to decrease, but probably is due to the pump in the last period for the crypto market. So net profit 424%, 969 total trades, 37% profitable, profit factor 1.16, max drawdown 24%, average trade 0.22%. So we have a risk reward of 2.50, which overall it's okay. That's why we are still profitable with this kind of win rate. Then we have 5 max win row and max loss row 11. Psychological perspective, this is not really good, but when you are dealing with this kind of low win rate, you can expect this kind of situation. So daily profit 0.56% and net profit slash drawdown 5.22%, which is really good. And in my opinion, it can be a good strategy to evaluate. Anyway, that's all for this video. This strategy will be free and you can find it in my Discord server, which you can find the link in the description down below. If you like this video, please press the like button, subscribe to the channel, and we'll see you in the next one. Bye guys!